Oh yeah, I do have to bring my computer to class tomorrow because for my final exam for federal income tax, we're taking it in our normal classroom and we're just bringing our own laptops to take the test. So yep. Yeah. I wonder why our professor. Oh, you know what? Because I think the professor in our intermediate accounting class prefers that we take our tests in the computer lab, mainly because it's easier to take the test with two monitors, because you have to read the directions of the problems and also type your calculations into Excel, and having to switch between the two windows all the time is annoying. But that's exactly what I'm doing right now, because I am on my laptop. That was fun. Oh, gosh. Man. I got a 70 out of 100 because I got one question. I mean, I messed up one little thing and I got 20 points off. Man. What's the worst grade I've ever gotten on a test? You know what's funny? I think that might actually be the worst grade I've gotten on a test since once I got like a 50% on a test. The two worst grades I've ever gotten on a test are the 70% that I got 2 days ago, and then a 50-something% in physics. It's so hilarious how I got a 50% on a test in physics, and my final grade in the class was like a B. Because my grade before taking the test was like a 97%. And then after I took the test, my grade in the class fell down to like a B. I can't remember what the exact grade was, but oh man. That one test pushed my grade down by like a full letter grade, like over a full letter grade, just from that one test. That was actually a pretty fun class because there was only like 3 people in the class. And we kind of were friends. That was fun. Well, I think there was like 4 or 5 people, but like 2 of the people never really showed up for class that often. So it was pretty much just 3 people the whole time. How are the only 3 people taking physics? Maybe nobody wants to take physics because it's too hard. Yeah, I should have thought of that before I decided to take physics. Why did I decide to take a physics class? That was a terrible idea. Dang, I need to do chapter 10 and 11 exam. And I totally screwed up this exam. I missed 2 questions on this exam, which caused me to get a 70% out of 100. I mean, I'm lucky I didn't get a worse grade. Like, I'm surprised they only took 10 points off for the first question, because I did it totally and completely wrong, and he only took 10 points off for it. Whereas the one question I did completely wrong, and he took 20 points off. So maybe I didn't do it completely wrong. Maybe he's like, well, he had the right process for calculating depreciation. It's just he did this one little thing wrong. I don't know. Whereas there was one question where just because I made one single mistake, the question that was worth 20 points had only one step to solving the question. And it was to determine whether there was impairment. I said there was impairment because I misunderstood the fact that the number that they were giving you included goodwill. But I thought it didn't include goodwill, so I added goodwill to the number, and then I determined there was impairment. Well, it turns out the number included goodwill, so therefore there was no impairment. The answers to the exam and the questions. Question 1. Oh, geez. No, that's... Oh, no. I did the wrong one. It's not 10 and 11. It's 12 and 17. Dang it, now I have to redo everything. Come on. Close. No, stop. How did it open instantly? The blank Excel sheet. We have the questions and we need the answers. And we'll only look at my answers if I really feel like it. But anyways, we have... So they purchased a patent on January 1st, and then they did the lawsuit, and they incurred the lawsuit, the cost of this much to defend the patent. So the reason I got this question wrong was because I added 302,600 to the cost and then depreciated it with oh my gosh. So I depreciated. Oh, damn. So the remaining useful life, like you depreciate the 302,600 at a different rate than the 1,497,600, which is so fun. Like I never even did that at all during the entire time that we studied that chapter. I never did two separate depreciation rates for two separate parts of a patent, so that's why I got the question. So according to the answer key, you have this. The lifespan of this is 96 months. The lifespan of this is 85 months. So the monthly amortization is this and this. The initial carrying amount is this. The initial amortization amount is this. What on earth? What are they talking about? Oh, I get it. So this 374,400 should be the amount of months from. It should be it should be 36 months times the monthly amortization of 15,600. Then add the carrying amount, and then add however many months it was. The legal costs are depreciated. So, dang my life. Now, what's the second question? I think I did that correctly. No, was that the goodwill? I did this question correctly. This was actually pretty easy because It's funny, he gave you a whole income statement and it's completely irrelevant. You don't need the income statement for this question. Why would you do that? Okay, well. Oh no, this is the goodwill question. I got this wrong. Oh my gosh, he actually gave me half credit for the question. Thank goodness. Because he took off 20 points. Oh, never mind. No, I got number 1 correctly, probably. But I got number 2 wrong. So, because I got half of 2 wrong. Number 2 wrong. He took off 20 points for me getting that wrong. So, anyways, we have purchase price minus the fair value of the net assets equals goodwill recorded. The fair value of Warhawk, again, I thought that the carrying amount that they were telling you was excluding goodwill, but it wasn't. So thanks a lot. Man, that caused me to lose 20 points. Got me to be kidding. That single-handedly probably prevented, that single mistake prevents me from getting an A in the class. One single mistake cost me part of a letter grade. That's fun. I can still get an A, but probably not, or I can still get an A minus, but probably not an A anymore because my grade's at 92%. And I think I have to get up to a 95% to get an A. Oh, there's no way I'm going to increase my grade by 3% from taking the final exam. Dude, what if I get 100 on the final? That'd be so cool. It's actually technically possible for me to get 100 because I'm studying all of our previous test questions. If I complete all of the problems correctly, and then I somehow manage to get a 100% on the Chapter 18 questions, then I could get 100% on the final exam. So now we know how to do that. Unnatural growers again. What is with us doing the accounting for a timber harvesting firm? Wait. Wait. They acquired a 40% interest in tree cutters. Okay, so this was very easy because all you have to do is write the journal entry for buying the shares, write the journal entry for the cash dividends, and write the journal entry for net income. It's very easy. But I'll look up the answer key anyways in case there's some random thing. What the? Wait, what are we looking for? Oh, you don't have to write any journal entries. You just have to... So you have original cost, net income add, subtract dividends equals the balance. So yeah, that's very simple. And then the A, B, C, and D for the multiple choice. I remember taking the multiple choice questions for that exam, and I was like, the answers are A, B, C, D? That seems a little too suspicious. But yep, nope, that was actually the answers. Now it's time to do it. Can I actually do this correctly for once in my life? Dang it. So, what will be the carrying value of the patent on December 31st, 2023? So, first of all, okay, what's the yearly depreciation? We have 1,497,600. And then how many months of useful life is it? 8 years, 8 equals 8 times 12. That's 96 months. So this equals this divided by this. So that's the monthly depreciation. And then for the second part, we have 302,600. How many months is it? Well, it's actually 96 months minus 11 because it was in December. So we have 85 months, right? So 85 months of depreciation. This equals this divided by this. Monthly depreciation of that is that. So now that we have the monthly depreciation, we can determine that we have this equals this. The book value is this. How many months of depreciation? So there was 36 months of depreciation. No, there's 2 years of depreciation, so it's actually going to be 24 months of depreciation times this. That looks good. And then we have, add this to it. Oh yeah, and we have, well, we want to subtract this number. I wish we could easily change this to a negative. I guess we'll just put a negative right there and change it to a negative sign. Then we will have how many months of depreciation there? We will actually have 13 months of depreciation for that one. So equals negative 13 times this. And so the sum of all those is going to be the book value of this. 1,379. 520. Hey, look, I did it right. Unlike when I took the test 2 days ago and missed and got a 10-point grade reduction based on not doing the question correctly. This is awesome. No, that was fun. Wow. The second question is about goodwill, and this question single-handedly cost me my A in the class. Well, actually, it was the patent and goodwill question that cost me the A. They combined, but the goodwill was the biggest deduction in my grade because it was 20 points. 20 points off of my grade for one single question wrong. Technically, I only got half a question wrong, but it was 1 problem has two questions. What was the goodwill associated with the acquisition of the corporation? Okay, so it's very simple. So assets minus liabilities is 1 million, but you have to add 150,000. So it's equal to 1,000,000 plus 150,000, and then they paid an amount of 1.5 million, 1,500,000. So equals this minus this. Goodwill of 350,000. And then here's the fun part. They stated that the quote identifiable assets have a carrying amount of 1 million. I thought that excluded goodwill, but it doesn't. What? Are you kidding me? The identifiable assets have a carrying amount of 1 million. You know what I might do though? Because what if he does have impairment? What if there is an impairment though? Well, wouldn't the impairment simply just be the difference between those two numbers? I guess I'll look it up in the other answer key, the answer to the review for this test, because anyways, there was no impairment because of stupid idiotic. The fair value is more than the carry amount. If I look at review for this, he might have a question where there is impairment. So let's see. Goodwill. Okay, there's the goodwill solution. Where's the goodwill question? It says including goodwill. Look, it had the words including the goodwill in the wording of the question. In the review assignment. If I had just done the review assignment, I may have actually been like, well, in the review it said including goodwill, but in the test it doesn't necessarily say it, but it doesn't say otherwise, so we'll have to assume that it does include it. Okay, there's impairment. Is the impairment just 100,000? Let's see. Nope, it is. It simply is 100,000. So we have a loss and impairment, goodwill. So yeah, it's very simple. If there's impairment, just take the difference between the two numbers that they give you. What if they give you a number that doesn't include goodwill, though? Well, hopefully they don't do that. Okay, now for this one. I don't know if you even need to do this question. Can I just rush through this question, please? Because I got it right on the test 2 days ago, so I should be fine. Okay, so $5 million. What are we trying to do? We're trying to figure out what the value of the investment is. So we... Does that matter at some point? Does the amount of shares and the par value of the shares matter? I don't think it does. That doesn't matter. The dividends are going to be 500. You subtract. So negative 500,000 times 0.4, and then you do adds equals 600,000 times 0.4, and then equals sum, and the answer is 4,824,000. Are you kidding me? How did I get the wrong answer? I said negative 500,000 times 0.4. How is that not right? Did I type 60,000 instead of 600,000? No, I just rushed through the question, that's why. The dividends one was right but I accidentally typed 60,000 instead of 600,000, so that's why I got that part. There, now I should have the right answer. 5,040,000. There you go. Do not be an idiot and type 60,000 instead of 600,000. And then finally, multiple choice. I got 4 out of 4 on multiple choice, thankfully. What was trading securities are held with the intention. I already know what the answers are. Dang it, now I'm gonna. Trading securities are held with the intention of selling them in a short period of time. Long-term investment in stocks has its regular cash dividends recorded as income when using the fair value method. These are the easiest multiple choice questions. C is the answer for that question. D. It's going to be D, the earning in the period in which the earnings are reported by the investor. And I have studied every single test. So there you go. Now what I'm going to do is study Chapter 18, and the way I'm going to study it is to look at the assessment. Because stuff. Oh, you know what I could do though? I could study the homework questions that we had. I don't know. Because like those were kind of confusing actually. Like even though he gave us the answers in class, like I didn't really understand a couple of his answers. It was weird. So neither party has performed under the contract, and either party may terminate the contract without compensatory damages. On June 15th, they delivers the product and therefore should recognize revenue as Marigold satisfies its performance obligation by delivering the product to Greg. I'm just going to read the rationales for these solutions because it's just going to be multiple choice. Oh, come on. What is this? A. The transaction price of this, it says the payment is due at delivery, so revenue will be recognized at delivery. When you make the sale, it's not going to be recognized at the point of sale because at the point of sale, they have not made a payment. Neither party has performed because they have not delivered the goods and the other party has not paid. So therefore, you must recognize it at the point of delivery. Just recognize the entire point of this whole thing is that only recognize something happening when something happens. Only recognize it when one party has performed their obligation. Sells goods on account. Sells goods, payment. So apparently if you sell goods, that was funny. If you sell goods and the payments are not going to be made until later and the future value of the payments is different from the present value, you have to report the transaction price as the future value of the payments. Because the payments, I don't know, for some reason you report at the future value. That's weird. Sells goods. Oh. Recognize revenue at the point of sale and recognize interest revenue of $33,000. Okay, so they do recognize the full 536. It's just that they split it up into revenue and interest revenue. Dang it. So anyways, number 3. Where's the solution? What the? What? They don't show a solution. Maybe it's because there's not really a solution to go with here. That was one. Enter a contract, do not enter anything. If you receive cash but you did not perform your obligation, you record unearned sales revenue. Then when you finally perform the obligation, you reverse the unearned sales revenue and record sales revenue, and then record cost of goods sold and inventory. Next. Well, expected value of bonus. Where did you get the 339? Blah, blah, blah. So you do the percentage of the probability multiplied by what? The bonus that will be received. Then you add them up. Use of probability outcomes is more accurate. So oh, okay, wait. What is the transaction price? 7.7 million. So because the reason for that is because the arrangement only has 2 possible outcomes, they determine the transaction price based on the most likely approach. Thus, the best measure is 7.7 million. And then what is B? Oh my gosh, that was weird because like license revenue. This was a weird question. On December 20th, regulatory approval was granted on the 20th, therefore you earned revenue. Then they paid, so there. Now apparently it's license revenue. Dang it. Is this even helping me study? Since each element sells separately and has a separate standalone selling price, the equipment, installation, and training are 3 separate performance obligations. The total revenue of $80,900 should be allocated to the 3 performance obligations based on their relative standalone selling price. Thus is this. Dude, He said we're not going to have any math questions on the exam. It's just going to be multiple choice. Those ones. What if it is math questions and the way he writes multiple choice questions is they're all conceptual questions. There's no math questions that are multiple choice. As opposed to our federal income tax professor who likes to put all these math questions as multiple choice questions. I guess I can't complain that at least he's not giving us math questions where we don't have the answer right there in the multiple choice answers. But still. What? What is this? Oh my gosh. Whoa. 4,000. There's no allocation of prices? What on earth is going on here? What? Wait just a second. Am I doing this math correctly? $36,500 plus $367,500. 404. I'm stupid. The standalone selling price says add up exactly to the regular price, so there's no allocation necessary. It's already automatically allocated. Sales revenue of 367. So it's unearned service revenue instead of service revenue because they did not perform the installation yet. The total revenue should be allocated to the two performance obligations based on the standalone selling prices. In this case, the standalone selling price of the equipment should be considered 1.1 million. Yeah, this was a very confusing question. Let's see here. So why did they do that? No, this is not the confusing question. There's a very confusing question coming up. That's one. The standalone selling price of the equipment should be considered 1.1 million, and the standalone selling price of the installation fee is 50,000. So that makes sense. Yeah. Like what I was doing for the question originally was I was like, oh, I will subtract 50,000 from this price. But no, they say because they charge the same amount regardless of whether they install it or not. That is so weird. That is so weird. It's like, we'll install it for you for free. Like, what? We have a free installation. That is a strange way to do it. Anyways, was B. June 1st. June 1st, delivers the equipment. They have accounts receivable, sales revenue, how come they have unearned service revenue? Oh, I get it. It's because they technically also received the payment for the installation at that moment. Or no, they didn't. They didn't receive the payment for the installation. They now are obligated. They now are entitled to receive the payment for the installation because it's included in that price already. So therefore, unearned service revenue. Cost of goods sold. Then they perform the service. So they got this, and then they received a payment. Okay, that's pretty straightforward. Sale of equipment should be recognized upon delivery as the customer controls the asset. Therefore, service revenue for the installation is recognized is on that. Okay. Oh, nice. That's fun. I mean, this is pretty easy. It's still just price allocation stuff. Because all you do... this was so hard, actually, because the standalone price of the oven is what? A10. What's the standalone price of installation? 48.51. What? Oh, wait, never mind. The standalone price of the installation, they say, is $860 minus $810. And the standalone price of the other one, well, they already told you $150. But anyways. And then you allocate that across the price of what? $980. They gave you a price of $980 for all three. So allocate the price. That's not that hard. I mean, we're not even going to have any math questions. Like, what conceptual is this even helping me study for the test? Like, I'm studying all the math for this stuff, but I don't need the math. I just need the concepts. Okay, this question confused me because... Why? If you modify the contract, you don't retroactively change the previous thing. I think that's the concept from this. The contract modification for the additional 49 products is in effect a new and separate contract for future products that does not affect accounting for the previously existing contract. Because the new price does not reflect a standalone selling price, allocates a modified transaction price. That was funny. Dude, oh my gosh. Returns are recorded as they occur. With a debit to return inventory and a credit to cost of goods sold. If any returns are outstanding at the end of the period, do you mean outstanding? Note, there is no adjustment for volume discount because it is not probable that the customer will reach the benchmark. Wait, what does it say? Okay, so you just don't even account for the volume discount. Sales 3. Hey, there was so much math here. Allocate the performance allocation. And then it was weird because this didn't really help. Maybe okay, I think actually it might be a better idea to study the pre-lecture learning thing. I don't know. Anything but reading the textbook. What happens? So these types of questions might actually be on the thing on the exam. What happens if the measure of remaining performance obligations exceeds the measure of the rights remaining? Okay, this was a super confusing question. The measure of the remaining performance. Okay, so you have more. You have to perform more things. Therefore, you have unearned revenue. Therefore, it's a liability. I don't know why I thought that was confusing. Anyways, when is it considered to be earned? Oh, that's pretty easy. The revenue recognition principle, a feature of accrual accounting, requires that revenues are recognized on the... I don't even need to read the solution. That's too obvious. Oh, thanks. A math problem. We don't need to do math problems. Dang it. I don't care. I'm just gonna answer something. That's funny. How should the transaction price for multiple performance obligations be allocated? Which of the following will require a debit to interest expense for the seller? Well, what will cause the seller to have interest expense? They will have to pay interest for something. Well, what is it? I don't know. What even is this? An interest expense is the cost incurred by an entity for borrowed funds. So, when did they borrow funds? Companies enter repurchase agreements which allow them to transfer an asset to a customer but have an unconditional obligation or unconditional right to repurchase the asset later. The heck? So maybe what happens during which part of the revenue recognition process does a change in control of assets occur? What the heck? Revenue recognition process. Oh, by the way, I think I'm just going to type this. That was fun. I did not expect to be able to finish studying for the intermediate accounting test this quickly. I thought it might take me. My plan was I'm going to study for the intermediate accounting until like midnight, and I'm going to go to bed and get up at 5 in the morning, and then study for my federal income tax test until I leave for my exams. But I'm going to finish long before 12. So I may as well get some more sleep. Instead of studying for my federal income tax test, I'm just going to sleep more. Watch as I fail a test. That's fine. I don't feel like getting only 5 hours of sleep. During which part of the revenue recognition process does it change? I don't even know what this question means. So, what is this? What is this question even talking about here, folks? No, I answered it correctly. So, when this transition happens, the company receiving the assets now has full control of the assets because it can direct use of and obtain substantially all the remaining benefits of the assets. Well, how does that... Okay. That was funny. A real estate agent sold a house for this much. What is the revenue? The revenue is going to be $280 something. I mean, it's just 287 minus 8.6. What? What on earth? What the? Oh, I'm stupid. The real estate agent will record this amount. No. So, commission is a percentage of total sales as determined by the rate of the commission. After the sale is made, the real estate agent would record the revenue at the amount of the commission earned. 8,610. In a revenue arrangement involves more than one performance obligation. Which of the following conditions must be evaluated? Isn't it whether they're distinct services? The company must provide a distinct product or service. The company's products are distinct within the contract. The company must provide a distinct product or service. The company's products are distinct within the contract. What's my estimation for what my grade will be on the intermediate accounting test? I guess my best guess as to what the grade will be is 90%. And what's my best guess as to my federal income tax grade? I'm gonna guess 70%. No. Oh man. I shouldn't feel bad because the median grade of one of our intermediate accounting tests was a 48%. Oh my goodness. But that's intermediate accounting. Federal income tax is different. I don't understand how everyone's doing so well on their federal income tax tests. Like I'm performing below average on those tests. What on earth? I'm putting more effort into that class than I am into intermediate accounting, and yet I'm getting a way better grade. Although actually not, now that I think about it, it's completely changed. Because I used to have a 96 in intermediate accounting, and I used to have a 90% in federal income tax. Now, my intermediate accounting grade went from 96 to 92 with one single test. So now they're not even that far apart, which is very weird. But I don't really deserve a 90 because my professor gave me 100% on a test where I only got 45.5 out of 55. I have no idea why I did that. Entered into a contract while it was underway. The contract had to be modified. At first, it was going to treat it as a separate, and then at the last minute, they decided to use the prospective approach. I don't know what the answer is. I'm just going to click a random number. Yeah. Whether a modification is treated as separate or prospectively, the same amount of revenue is recognized before and after. But in the prospective approach, a blended price is used for sales in periods after the modification. Which of the following is the last step in the process for revenue recognition? The 5 steps in the revenue recognition process are: identify the contract with customers, identify the separate performance obligations in the contract, determine the transaction price, 4. Allocate the transaction price to the separate performance obligations, 5. Recognize revenue when each performance obligation is satisfied. An initiation fee for an exclusive country club Okay, and when do I have to leave tomorrow? I have to start an exam at 1. So I'm probably going to end up leaving at like 11:45. Dang it. Man. I need to get up early enough so I can actually study for my test. I don't want to get up early. Dang it. But I can't sleep in too late because then I won't have time to study for my test. I have to study for that test. I'm going to totally fail if I don't study. When a contract is wholly unperformed and the parties can terminate the contract, postponed? No, it's actually disregard revenue guidance. That was funny. I don't feel like reading all that stuff. What is the first step in the process for revenue recognition? Identify the contract. What happens when one or both parties perform under the contract? So that means the revenue, it will result in a journal entry because one of them performed. Key feature. A liability would be unearned. Magazine subscription? What is that? A contract liability is an entity's obligation to transfer goods or services to a customer when the customer prepays consideration or when the customer's consideration is due for goods and services that the entity will yet provide, whichever happens earlier. An example of this would be an unearned magazine subscription. Prepaid subscription means the amount paid for a subscription in advance and is considered an expenditure. Unearned magazine subscriptions means the company received a payment for a subscription, but they did not send the magazine yet. When and by whom is the sale of consigned goods recognized? As revenue. It is recognized by the consignor when it receives payment from the consignee for goods sold. Consignment arrangement occurs when a manufacturer delivers goods but retains titles to the goods until they are sold. Under a consignment arrangement, the consignor ships the merchandise to the consignee, who is to act as an agent for the consignor in selling the merchandise. In this case, the consignor would recognize that revenue when it receives payment from the consignee for goods sold. How many standards did the IFRS have regarding revenue recognition? I don't know. Who cares? Why does this even matter? I don't care. Why does that even matter? That's the number of standards that the IFRS had for revenue recognition before. It's not even relevant anymore because they now no longer have that. Great Visions Company entered into a contract on January 5th. Okay, when should the contract be recorded? March 31st. Which of the following occurs at the end of the recognition? I feel like some of these questions are kind of weird. Like the IFRS question was like, really? Why? And like the questions where they're like, what's the first step in the revenue recognition process? That was fun. Tina's company has recently completed a contract modification that is being completed under the prospective approach. I don't know. I'm just gonna. Oh wait, blended price. Nope. Whether a modification is treated as a separate performance obligation or prospectively, the same amount of revenue is recognized before and after the modification. However, blended price is used for sales in periods after the modification. Before and after modification, the same amount of. I didn't read it closely enough. I just clicked on the one that said blended price, but there was actually multiple ones that said that. Organic Gardens sells organic vegetable, fruit, and flower seeds and seedlings, as well as organic bug and weed killers. They give customers a 30-day unconditional right of return. If they're not satisfied with the products on April 6th, customer purchase the products. Based on prior experience, they expect a return of 20%. Ouchie, 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 ouch. Do you No, you don't record it. You record what the heck? What? Why? Where'd you get the 50 from? Wait a minute. What is 1/5 of 15? 30. What the heck? Oh, what is 1/5 of 75? That was 15. Dude, 50. 150. 150 is 20% of 750. Where on? Okay, I don't care. I'm just going to click a number. Answer. To record the return, they would debit returned inventory for $50. 100 times 50%. What? Why 50%? What? Why is it 50%? That's weird. $50. Oh wait. Where'd they get 50% from anyways? What on earth? Like, I know the cost of the product is 50%. I guess the reason is because 100 means that it was $100 selling price of the product, so the cost of the products was 50. Oh man. Okay, fine. What is considered a receivable on the balance sheet? Manufactures and sells the players. Oh my God. It's going to. They. Ouch. What is going on here? They received money for some service that they would perform in the future, therefore, on service revenue. Warranty policy. Balance on the unearned revenue account is a liability of the business. Oh my gosh. That was funny. Expected cost margin approach. Dude, if I get up at 5, or no, if I set my alarm for 5. Okay, you know what I might do? Most accurately describes the expected cost plus margin. The expected cost plus margin approach. What is that? The expected cost plus a margin. Oh. Expected cost of margin is where a company forecasts the expected cost of satisfying a performance combination and adds an appropriate margin for every accurate service. Oh my gosh. They're like, what step number is it? Nobody cares about what number it is. They just care about what the steps are. They don't care to have new cabinets built in her kitchen. That's why these questions are dumb. They're like, ooh, memorize the numbers of the steps. No, don't memorize the numbers, memorize the steps themselves. Entered into a contract. So that will, at what point will the revenue be recognized? Step 5. No, the real answer is not step 5. It's when there has been a change in assets. I mean, when there's been... It's when the performance has... They have performed. That was funny. They have performed the service. That's when the revenue is recognized. Oh, jeez. I don't feel like doing anything else, so bye.